Hello folks, there are lots of traders with small accounts. They want to double their account within a short period of time or even to fivefold or tenfold their account. But they don't know which specific strategy to use in order to grow their capital. So if it is the case with you, then you are at the right place because in this session I'm going to explain the techniques to show you how to use this strategy to grow your small accounts. Stay tuned, learn the technique, implement it, and thank me later in the comment section. The strategy is simple. First, we will pull out the trend line. We will draw it to see if there is any third touch, and we saw here it is. Then we will pull out Fibonacci retracement and we will draw it from the last area, from the last top or last bottom. So let me zoom in. Guys, these candles are on 50% level and the trend line is also aligning with the 50% level of Fibonacci retracement. So the third confirmation is the small candle. It is a doji type candle which is a bearish sign in a retracement move, and later we saw the last candle which is a bearish engulfing candle, this one. So we will enter in the market immediately. What we will do, like if you enter in the market at 50% level, you will have to place your stop loss above 60% level. This should be the rule for every entry you take in the market. And the last area from where the market made the retracement move will be our profit target. So guys, it was easily a 1:5 risk to reward trade. This was the first example, and believe you me, I have tested this strategy several times by myself. I have experienced it. It is one of the best strategies in trading, and it is also simple to use. So it was the first example. Now let me show you the combination of trend line and Fibonacci retracement in an bullish trend. So like guys, this is a GBP JPY pair. We will pull our trend line. We will draw it from this lower point to see if there is any third touch, and we saw here the market is touching the trend line for the third time, which is a confirmation that the trend is bullish. For further confirmation, we will pull out the Fibonacci tool and we will draw it from the last key level, the last area, and yeah, we saw the market has formed this candle which is a sort of pin bar, and it is on the 50% level plus. It is touching the trend line for the third time. It is a bullish signal. It is indicating that the market will continue its bullish run. So what we will do, if we are entering the market at 50% level, at this point we will place our stop loss below the 61% level. This way our stop loss will be less likely to trigger. And which area we will target? We will target the area from where the market made the retracement move. The market easily achieved this level. So it was also a 1:4 trade, a 1:4 risk to reward trade. So guys, one of the simple strategies to use to grow your small accounts Here I am having another example. I will pull out the trend line. I will draw it from the last low and see if there is any third touch on the trend line. And I saw here I was having the third touch at this point. So what will I do now? I will pull out the Fibonacci tool. I will draw it from the last low to the recent high from where the market made the retracement move. Can you see it? It is quite obvious. So what happened? If we look at the candlestick confirmation at this point, it is a hammer candle, it is a pin bar, which is indicating that the market will continue its bullish run. So we are having very strong signal like the trend line, the Fibonacci tool, the 50% level, and the pin bar candlestick. So we will not wait for any time to enter in the market. We will immediately take the trade. We will place our stop loss below the 61.8% level. So at this point, we can also target this high at this point. Like, let me remove it. Yes. This point, which is also a supply zone, or even if we target the high from where the market made the retracement, it is still a 1:3 trade, 1:3 risk to reward ratio trade for us. So basically it is having high risk to reward ratio, and whenever you try this technique, whenever you try this method and this strategy, you will be having 70 to 75% accuracy in the market. The winning ratio of this strategy is 75%. So let's say if you are even having 1:2 risk to reward trades with 75% accuracy rate, 75% winning rate. So imagine how much time you can double your account, and let's say in how much of a short time you can triple fold or fivefold your account, and that is even possible within a month. So it was one of the simplest strategy to use in trading to combine first to pull out the trend line, draw it to see if there is any third touch, then pull out the Fibonacci tool and see for further confirmation. It will boost up your confidence and you will be confident in your trade. Another way to use Fibonacci retracement is to simply pull it out, draw it from the last low, see if there is the market is dropping on any important level of Fibonacci retracement, and then look at the left to see if there is any point supply and demand zone, or if any support resistance zone or a flip zone. So if we see the market has created a high at this point which the market broke and now it is a flip zone, and apart from that price action technique, and if we see it in terms of supply and demand, it is a supply zone too. Sorry, it is a demand zone too, which is lying on 61.8% level of Fibonacci retracement. So if the market is if the market has dropped on 61.8% level, what we will do? We will place our stop loss in between the 61.8% level and 100% level. So this way it will be less likely to get trigger. And if you are also looking for like demand zones, supply zones, flip zones, support and resistance zones. You can also place your stop loss below these zones. As you can see, the stop loss is in between the two levels, plus it is below this demand zone too. And which area we will target for the profit? So as I said, the area from or the high from where the market made the retracement move will be our target. And most of the time your take profit will be triggered. So let's look at it in the bearish example. The market is in a clear downtrend. The market has created this low which the market broke, which was meant to be a support, but the market broke it. Now it will be likely to become a flip zone, and we saw it became a flip zone. So now what we will do for further confirmation, we will pull out the Fibonacci tool. We'll draw it from the last high to the last low to see if the market is on any important fib level. And yes, the market is on 61.8% level, which is the most important levels in Fibonacci tool. Plus, there we were having the flip zone at this point too. Like guys, look at this again. What is this? It is a flip zone. So now in this scenario, we will place our stop loss in between the 100 and 61.8% level, and we will target the area, the low from where the market has made the retracement. So guys, again, look at this trade. It was a 1:3, 1:4 risk to reward trade. This way you can grow your small accounts within a matter of weeks or even days. Thank you for watching the video till the end. See you in another video. Take care.